So one of the biggest things that I've learned over time is that in order for us to be good investors, we need to think like a doctor or a scientist. Because when we have strategies that have been tested and verified for their ability to add value to our process and to build wealth, we as investors need a solid foundation for making investment decisions that aren't clouded by human flaws and emotions. It's amazing how often people invest based on tips or news or opinions rather than on sound factual research. So what I'm going to challenge you to do is to look at your own investment strategy to see, are you using an approach that is evidence-based? So here are some questions that you can ask yourself to see if you're doing well from an evidence-based approach standpoint. The first is, do I have a strategy that over time would produce good results? So if I had used this strategy over time, what would the results have been? Second, what are the returns and risks compared to just a simple passive index? And the next question would be, are the returns satisfactory after taxes, transaction costs, and impact costs? So you have to understand your costs really well. Another question could be, how did the strategy perform when the markets were volatile, when the markets were quiet, upward or downward trending? Because you need a strategy that's going to do well in all different types of market environments. The next question to ask yourself, is the tactic robust enough to work under extreme market conditions? We recently had a big decline in the stock market. How did your performance fare? Are you ready for that again? Another question to ask is, what are the underlying drivers of return? And does it make logical sense that these assumptions will be true in the future? So it's really important to know the underlying assumptions of your strategy and that you have a reasonable basis that should do well in the future. Also, you want to ask yourself, what is the chance that this strategy will perform better than randomly throwing a dart? So the bottom line is we're trying to deal with our human emotions. We have herding behavior, overconfidence, and there's also theories out there like prospect theory that talk about how our brain works. We want to avoid making behavioral finance mistakes. So using an evidence-based investment approach helps you beat that problem. So my challenge for you today is, take a look at all your statements of all your investments and ask yourself these questions that I just listed out. How are you doing with your portfolio? And if you'd like a second opinion on that, just give us a call. You can always talk to us. We will give you a free portfolio analysis for you to take a look and to see how you're doing in all those areas.